What is going on, everyone? In this video, I'm going to be teaching you the best possible method to trade the 10 a.m. 4-hour candle power of 3. Now, you need to understand that 95% of the candles are going to have a wick to the upside or to the downside. Our goal is to capitalize a move to the downside from the wick area, which is around here. Okay, so what exactly is power of 3? It is a market condition where first price accumulates and then it manipulates, so basically liquidity sweep, and then we have distribution to the downside. But the problem with that is that price could keep manipulating higher and you could get faked out a lot, okay? And that is exactly what I want to teach you, how you can avoid that and how you can take the best possible setups that are presented with the 10 a.m. power of 3, okay? So first thing first, what you want to do is mark out the 10 a.m. open, okay? So this is a bearish candle. So as soon as it opens at 10, you want to mark out the opening price. Now, what you want to do next is you want to drop down to 15-minute time frame, okay? And then what you want to do is mark out key levels. So a key level could be 15-minute swing high or a 15-minute fair value gap, okay? This could be fair value gap or swing high. You can choose one. If there's a fair value gap, you can utilize that. So these are your key levels, swing highs and lows, right? And fair value gaps on the 15-minute time frame. Now, what we are anticipating after the open, so once the candle opens, this is what's going to look like on the 1-minute time frame. So we're going to have open. We're going to sweep out the 15-minute high that we marked out, okay? And then there's a potential that price can go down. But we need one more confirmation, and that is the most important thing when trading the power of 3. So step 1, key level after the open. Swept, check. Now this step is SMT divergence at the key level. So when we take out a swing high or tap into the 15-minute fair value gap, we are looking for SMT divergence where if NQ makes a higher high, higher low, and then a higher high, and ES fails to make another higher high, that is your SMT divergence, okay? Now, the next step is your entry confirmation. Once you have SMT intact, you're waiting for CIST or a breaker block formation. So once we do that, what you can do is simply take your trade at the retest, and then you can target the opposing low that we marked out, or the -2 of standard deviation, and you're going to use it, your Fibonacci tool, from the highest high, which was here, to the low before the market structure shift. And then you can target the -2 and -2.5 of standard deviation, or you can hold till -4. Okay? And similarly, if I invert the chart over, let's make it a bullish candle. Okay? So we have the 10 a.m. open. This is what the price would look like on the 1-minute time frame. We have the 15-minute swing low marked out here to the left side of the price. It has to be the most recent swing low and swing high, or the most recent 15-minute fair value gap. So open on the 1-minute, we tap and take out the swing low. We get SMT divergence with ES or YM. And then we look for market structure shift or breaker block formation or CIST, and we take our entry. And this is what the 4-hour candle would look like, right? And this is what the price action on the lower time frames would look like, okay? So SMT is very important, and then we look for CIST, and we pretty much target the opposing high. Now, if you can implement bias into this, that is very good, because let's just go here, and let's invert the chart over. So let's go to the 4-hour time frame, okay? So we can basically form our bias by looking at the 6 a.m. 4-hour candle. So what did the 6 a.m. candle do, right? It swept out buy-side liquidity, okay? And we had a rejection. We didn't close above these equal highs. So that is a liquidity sweep. With that in mind, knowing what the 6 a.m. candle did, we can anticipate a bearish power of 3 to the downside, potentially towards these equal lows, right? And overall, if you look at the structure is kind of bearish, although we are consolidating, but whenever we like create a lower low, We respect the PD arrays and then we push down. Cool. And also, considering today, we had this massive push to the upside, so we left this imbalance that is unfilled, right? And it has to be filled. So let's see how you would have traded the bar of 3 for the 10 a.m. candle today at this current moment. So with 6 a.m., we can know that our bias is bearish, right? It is not necessary, but it gives you a bit more conviction into your setup. So this is the 10 a.m. candle. So let's mark out the opening price of this candle. Now let's drop down to 15-minute time frame. And over here, you can see this is the open. Now look to the left side and mark out your key levels. So we have a swing high here, a swing high over here, and we have a swing low down there. So this is the open, key level, and key level to the left side. Now the final step is SMT divergence with the correlating asset or pair. So over here, look at this high, look at this candle that swept liquidity, right? This is here. But then look at this. On ES, we made a higher high, but on NQ, we failed to make another higher high. That is SMT divergence. Now we drop down to 1 minute time frame. So let's make it a bit more clean like this. Perfect. And let's make it a bit more clean like this. Now I'm looking for a CISD or a breaker block formation. So right here, we have a breaker block, but also we have CISD, consecutive bullish candles that swept liquidity. We swept this high over here, and then we had a shift in the state of delivery. These could have been your entries, and you can see how price just melted to the downside. And if I go over here to NQ and show you the 4-hour candle, right? You can clearly see that this is where we got our entry, and this was the distribution to the downside. Let me give you guys a couple of more examples. All right, so here is example number 2, and let's study this 10 a.m. 4-hour candle that was bearish. Okay, so looking at the 6 a.m. candle, what happened was that we closed below this low, and then we had this low, right, that was unswept, right? So there was potential for price to drop even lower. So with that in mind, right, this is like a rough bias. You don't need to look at the daily time frame or anything, just a rough idea, right? It gives you a bit more conviction and increases your win rate by like 5% or 7%, not much. So this is a 10 a.m. candle, so let's mark out the opening price, and then let's drop down to 15-minute time frame. Now, look at it here. We have the 10 a.m. open, and if you look to the left side, we don't have any swing lows that we can mark out. However, we do have this 15-minute fair value gap, okay? So price did tap into the 15-minute gap, but we need one more confirmation, and that is SMT divergence. So right here, that's when we tap into the 15-minute fair value gap, and we need a SMT at the key level. So if you look at here, we made a higher high on NQ, but on ES, we failed to make another higher high. Now, once you have SMT divergence, what you can do is simply drop down to 1 minute time frame. Okay, and then what we can do is also make it a bit more clean like this. Always keep your charts tidy, okay? So now, once we have SMT divergence, we can look for our CISD or breaker block formation. So our breaker block forms around here, right? We broke below this, and then we have CISD also. Usually, as I said before, I like to trade the breaker blocks. So this would have been your entry, right? Stops above the SMT level. I know it's a bit big, but we have to keep things logical. And then you can pretty much go for, I don't know, 1 to 2 risk reward. You could potentially decrease your stop loss and target these equal lows down there. That would give you like 1 to 2 risk reward. Also, you can go break even at like 1 to 1.5, or you can take one partial at around that level. So it's very simple stuff. Price taps into a key level after 10, right? And then we look for SMT inside that key level, whether it's a swing high or a fair value gap on the 15-minute. Then we look for SMT on the 15-minute time frame. And as soon as we see that there's SMT forming, we drop down to 1 minute and look for a confirmation that holds the SMT. So we need the SMT to hold, okay? And we confirm that by a market structure shift or a breaker block formation on the 1 minute time frame. Let's move on to the next example. All right, guys, here's another bearish example because the market starts bearish, right? So over here, we have the 10 a.m. candle. So simply mark out the opening price of this candle. Then drop down to 15-minute time frame. Now this is the open right here. So look to the left side and see if you can find the most recent swing high, right? And if you look at here, we have a swing high. And also that is a fair value gap that was already tapped into. So that is extra confluence. Now, once we tap into this level, we are looking for what? SMT divergence. And over here, what you can see, with this swing high, we had SMT divergence. So NQ took out this high, but ES failed to do so. So then what you would do is drop down to 1 minute time frame, right? And then we have this setup. So we have a lower low, lower high, and then we have a breaker formation. Okay, that is another form of breaker block. Okay, if you have watched my previous videos, you would know. And then you can pretty much see that, yes, we dropped lower, but we came back or retested this level to the tick. But personally, I would take my entry somewhere around here at the close, right? Stops above the SMT level. And then I would go for 1 to 2. I'm not going to chase big numbers here. I'm simply going to go for 1 to 2. And that was hit perfectly, as you guys can see. Let's move on to the next example now. All right, guys, here is final example, and this is a different one. So I hope you guys can understand this one. So even though the candle is looking bearish, it doesn't mean that this was the actual distribution. Okay, so let's mark out the 10 a.m. open over here, and let's drop down to 15-minute time frame. Cool. Now, what you can see here is even if you get the distribution completely wrong, right? You can still capitalize on this model because it's going to provide you with a setup. So this is the open, and you can see that to the left side, this is a fresh high. So we don't need it because without the 10 a.m. open, we didn't have a high. Okay? So we don't have a high. Already formed high that was formed before the 10 a.m. open. Okay? So what we can do is we can mark out this fair value gap on the 15-minute time frame. But then also we have a swing low to the downside. Now, the next step is SMT divergence. So let's go over to ES and let's mark out the same low on ES. Now, at the first glance, you might notice that we don't have SMT divergence, okay? But if you look at it very closely, we formed this low on ES and we have the same low that was not swept on NQ. So let's just drop down to 1 minute time frame and see what happened. So going over here, perfect. I hope you guys can see it. So right here, we have this low and we have this low, and that was swept right here on ES, as you guys can clearly see. But this low wasn't swept on NQ. Now what we can do is simply look for CISD, which is right here, the candle that swept liquidity. When price closes above it, this becomes an auto block, right? And this would have been your entry at the retest, stops below the SMT, and you could have potentially went for a very nice trade to the upside. Now, even though the price wanted to distribute lower, you still capitalized on this move to the upside because this is a rule-based strategy, and sometimes even if you get the distribution phase wrong, you can still milk this strategy. Thank you so much for watching. Please hit the subscribe button, and I'm going to see you guys in the next one. Take care. Goodbye.